So this is now my third red day in a row. Throughout the past 3 days, my portfolio has lost over $17,700. So I'm going to be explaining to you the mistakes that I ended up making today. It was mainly due to poor risk management and position sizing, along with starting the day off trading with low quality setups. I'm going to walk you through the mistakes that I made so you don't have to make them. But I will say this, guys, in terms of having minor setbacks in life, if you have the personality trait of resilience, where you're a very resilient person and you can recover from your losses fairly quickly, it is the greatest feeling in the world. I'm telling you, man, in 2020, I went through very, very hard times and I lost literally everything. And I was in a very dark place. And I've noticed in terms of one of my personality traits, I'm very resilient. I can recover from something fairly quickly and then within time reach for new all-time highs. And this was a minor setback where that feeling really came back to me. Like, man, I just blew 18K like it was nothing when I should have been green literally today. And that feeling of resilience is coming back. And I know I'm about to rise out of the ashes because my confidence and motivation is so high. And what it does to me is when I have a minor setback, it turns me into the exact person that I'm supposed to be, the type of person that is about to get new all-time highs on their portfolio. And it is the greatest feeling in the world. So one thing that I'm going to do is I'm going to try to remember that feeling and take that feeling to me with the top, so I don't only experience it at the bottoms. Because when you become very successful and as you're, climbing up the ladder, it can get very, very boring. It truly can, depending on how your lifestyle is set up and the way, your work is. Like, trading is a very lonely pursuit. And if you don't have a lot of people in your life, at sometimes it can get down and it can get depressing, no matter how much money you're making. It depends on your lifestyle and your work and stuff like that. But having that feeling of being alone and being resilient and experiencing loss and then recovering from that hardship on your own is the greatest feeling. So I'm going to take that with me and have that feeling not only at the bottom, but at the fucking top. That's something that I really learned throughout these past couple days. Now, with that being said, in terms of Orlando, I live in Orlando as of now. We were just hit with a hurricane. Thankfully, I wasn't affected. I live in a high rise. Another thing I learned is, basically for the past year, I've been eating pretty much the best food. Like, I'll do delivery three times a day. I'll get the best food, whatever I want. It tastes great. And then it gets boring. And then it just becomes food. And it's just depressing. And I don't have the biggest appetite. It's like the same old thing. Now, in terms of this hurricane, I didn't prepare for anything. I had no food in the house. I always do delivery. Uber Eats was closed for 3 days in a row. Everything was shut down for like 3 days. And with that being said, I didn't prepare, so that's on me, and I don't cook, so I really didn't care to prepare. That was the main reason why. So literally last minute, when I was done trading same-day expirations on SPY, I ended up doing a haul, and the only place that was open was pretty much like 7-Eleven, Shell, and stuff like that. So I went to 7-Eleven, dropped a couple $100s on like snacks, frozen meals, all this stuff. The food wasn't good, but I ate. I wasn't starving. And then everything's reopened now, and I just had a fantastic meal. And that meal that I had was the best meal that I've had in months. So that's always a reminder, man. Find ways to trick your brain. Delay gratification. There's so many tricks you can do with your brain. And you learn this through life experience and through hardships and through mistakes. You really learn through tough times. So like if there's something that, you really want to do, like delay short-term gratification. Do the hard work first and then seek the reward later. That's just something that I really learned for when I get down or when I get depressed. Like, experiment, go through like a little minor setback or do all the hard work up front, then reward yourself later on. It will taste and feel so much better than it ever did. Like, for example, like if you're working out, go hard for like 5 days in a row, and then literally from there, you can have a cheat day and have the best meal in your life. It's going to taste so much better if you're working out, doing everything you're supposed to do, and eating, not the best tasting food that's going to gain muscles, like stuff like that. I'm just giving you some examples that can make you happy, because I'm someone who's gone through a lot of depression and still do to this day. But those are just two things that I wanted to bring up, man. Resilience and then delaying gratification and stuff like that. They're the best feelings. So with that being said, guys, let's get right into it. So in terms of the SPY, let's get into the SPY. So what I'm going to do is I'm going to walk you through mistakes that were made. I'm going to walk you through some things that I did right. In terms of the morning, I did trade the morning. Like I've been telling you, the trades have not been good in the morning. I'm at the point, like I said, If I trade in the morning, it's got to be super light size. But guys, literally, I think the best thing we could do is just skip the morning. Let's just fucking skip it. Like, let's just sleep in, skip the morning, and trade later in the day. And the reason why is we got to wait for patterns to develop. So I'm going to show you a pattern right here. And this is the perfect fucking reason why skipping the morning would have just been so easy. So I ended up playing puts very early in the morning. I was up like 7%. One thing I've noticed with my trading is if I don't make a great trade at not the best entry, for the most part, it tends to work out very, very quickly where I'm up like 3%, 5%, 7%, a nice smaller win. And then it just rips against me if I hold it longer. So if you do take a trade at a poor entry, I would encourage you to get out very, very quickly, especially if the pattern or trend hasn't developed, right? So I was up in that situation, but it ended up being a loss. And then I just kept, losing a couple losses on puts. Now I'm going to show you where I started crushing it. And this is where the trend, developed. In terms of my mistakes, I really couldn't tell you much about my mistakes because there was no strong, great reason to be playing puts in the morning. It wasn't the smartest thing to do when it was at this key 361 support. And like I tell you guys all the time, in terms of put options, play at resistance. And if you see a big pullback at previous support and it rips back up to that previous support and reacts as a resistance, then you could play puts at that previous support level because it's now resistance to the new lower high, right, on the bearish trend. So that was the main mistake. Trading at poor prices, just jumping in, wanting to trade, wanting to throw money away to the market. Do not do it. If you do it, make sure it's small size. Do not fucking do it, period. Do not train yourself to do something stupid. That's the moral of the story, man. It's like, I think I can make money. It's not the best trade. It's an okay setup. I know I shouldn't be doing this. There's going to be much better trades that come along throughout the day. And if they don't, there's always another day, right? So do not train yourself to try to think yourself into just making money. Do not train yourself to I just want to make some money. I think it's going to work. Train yourself to do what's best for your portfolio, to do what's best for the entries, to do what's best for your trade. It's like, what are you training for? Are you training to make money or are you training to trade the best setups at the best prices, right? That's the end of the day moral story. Now, I want to get into the main things that were right. And in terms of one thing that I have noticed, and the reason why I do want to take that feeling of resilience with me to the top is I've noticed sometimes when I'm at the top, I just get really fucking bored and I just start throwing money into random trades and then just doing stupid shit because I'm just bored. So one thing I'm going to do is take that feeling of resilience with me to the top. So I just keep on consistently crushing it at the top and don't even have these minor setbacks because I already know all this stuff. I was just truly bored. So skip the morning. Don't worry about it. Wait for the patterns. Wait for the trend to develop. Now I'm going to show you the pattern. This is the key right here. Look at this. Look at this move right here. SPY has this big red candle on the 30 minute, and then it follows up with another big red on the 30 minute. SPY has this big red on the 30 minute, and then it follows up with another big red on the 30 minute, except this time it closed green, right? So you see this pattern, see how this is starting to develop, these two red candles. See how they look very similar, these two red candles. See the similarities between these two, and this was yesterday, right? So I'm going to draw some ovals, point out the similarities. What happens then? After that, the SPY goes up for an hour and 30 minutes straight. And then look, the SPY goes up for an hour and 30 minutes straight. So guess what? When I'm looking at this at 11 a.m., I'm saying, whoa, there's a pattern. And this is the pattern. It has these two big red bars. Yes, this one flipped green, but you could see they look identical, just different colors. And then it goes up for three green 30 minutes. It goes up for three green 30 minutes. And then what happens after that? It has a reversal. And you could see right here, it has the reversal and the red candle comes in. It has the reversal and the red candle comes in. Plus, previous support right here at 365, 366, strong resistance. And look at the candles, guys. Look at the patterns. Look at this, man. Let me erase all this just so you can see this clearly on how well history repeated itself today. And this is where I started fucking crushing it, when I waited for this pattern and trend to develop, right? Instead of just trading blindly into thin fucking air at poor prices with puts, trying to make some money. So right here, look at this candle and look at this candle. And you can see right here, it goes up, goes up. What happens when it forms this candle in the middle? What happens when it forms this candle in the middle? It sells off. It sells off. Do you see that pattern? And do you see how it repeated itself? Slanted sell-off. Slanted sell-off. Do you see that? I was rocking puts so many times, and I did well on those puts. I did fairly well on those puts. Then I started rocking calls. I had like two 50% gainers on calls. I played calls at 2:58 p.m. and then I played calls at 3:28 p.m. Absolutely crushed on calls. And then I played calls into the close and it was a 50% loss. But overall, percentage-wise, absolutely killed it. It's just I didn't size equally on each trade. So if I'm killing it percentage-wise, where if you were to take all my wins and losses throughout the day and take all of the percentage losses and percentage wins, these past 2 days, I would have been up, but I was not sizing in equally. So I have to get my risk management and position sizing back on point. I'm telling you, man, some of the dumbest things I do, I get bored. Like when I wake up and I just throw some size into these trades at the morning and they just go against me fairly quickly, hold them for a little bit, and then it's just a bigger loss than I anticipate. So the main tweak that I'm going to make with my trading is skipping the morning and just waiting for something to develop. Like give me something to develop. So what do I mean by something to develop? Well, you have these two big red bars. Well, you have these two, look, it's even this green bar, and then you have the two big red bars, the green bar, and then when it forms this green bar towards previous support at resistance, massive sell-off. When it forms this green bar towards previous support at resistance, massive sell-off. You see, and that didn't develop until 11:30 a.m. That's when it developed. So if I'm looking at Friday, and when I'm doing this, guys, I'm looking at 30-minute patterns, and I'm saying to myself, how does SPY react when it's at a key support level, forming this candlestick? Okay, right here. SPY's at key support, it's forming this candlestick. SPY's at key support, it's forming this candlestick. Same candlestick, same candlestick, same candlestick. What does it do? It goes up, right? That's what I'm doing. So if the 30-minute, if I'm going back a couple of days and I'm not seeing any pattern on the 30-minute that looks like the pattern that's currently forming, then I go further back. I will go further back. I'll use like the 10-day, the 20-day, the 30-day, but short-term history is my favorite, and that's what tends to repeat best. And what I'm doing is I'm looking at key levels on the SPY, right? And I'm studying the 30-minute candles, and I'm looking for a pattern at these key levels where history is going to repeat itself, where basically this pattern says at this key specific level that SPY should sell off. So like right here, has the green bar, it follows up with two red, This tells me, okay, history's starting to repeat itself. There's key support here, it bottoms, it rockets for an hour and 30 minutes, it bottoms, it rockets for an hour and 30 minutes, very similar prices, very similar times. Look at this, 11:30 a.m. sell-off, 11:30 a.m. sell-off. You see how history is repeating? So when you're seeing those patterns repeat, when you're seeing that history repeat itself in real time, you need to put your odds in the favor of that history. When you see it's now flipped 30 minutes on the red here and it's starting to go red and failing to break out, it's going 30 minutes on the red here, it's starting to go red, failing to break out. You need to become confident in puts in that trend reversal. And that's what I ended up doing. I played puts multiple times on this downtrend, absolutely banked. And I did do calls as well and absolutely banked. If you watched my video yesterday, I told you, if the SPY is beaten down at the low end of the channel right before 3 p.m., you're going to want to play calls. And guess who played the calls? I played the calls. And they absolutely fucking banked. And I did it twice. The third time it didn't work out, but I had 3 scalps on calls. They were all nice gainers. Well, 2 were nice gainers and the last one wasn't. It just didn't work. And it's funny because the last one had no reason to buy calls. It was literally just a YOLO. But in terms of the other 2, there was a strong reason. So again, entering trades where there's a strong reason, where there's a strong pattern, not YOLOs into thin air where there's no pattern, where there's no strategy, and you just want to trade because it's at a specific price with no confirmation, no pattern, no history. We can't do that. That's how you throw money and lose money within the market. We're not trying to trade to make money. We're trying to trade to trade. You got to train yourself to trade to be the best trader. So in terms of the play, and I clearly mentioned this in yesterday's video, if you see the SPY beaten down right before 3 p.m. at the low end of the channel, which it was, you're going to want to play calls. So what did I end up doing? I ended up playing calls at 2:56 p.m. And this was the genius part. I'm going to share with you the genius part. So let's go to it right now. So right here at 2:56 p.m., this is where I bought calls, right here. And then I added 2 minutes later. Why did I decide to play calls right there? Well, first of all, like I said, if SPY's beaten down at the low end of the channel and calls have been getting crushed, you're going to want to play calls into that 2:56 to 2:58 p.m. period right before the 3 p.m. power hour spike. And it worked once again, just like yesterday. So we bottomed at key support. It started to form higher support right here at this 2:59 p.m. Boom, add into calls. And it rocketed from 359.20 to 361. Within those 4 minutes, Calls went up over 50%, absolutely banked on them. And I did the same exact thing at 3:28 p.m. This one, I can't really explain how I did it. Basically, the 30-minute chart was looking super bearish. It was looking like a bearish doji. And I was studying this pattern. I went really further back to find this pattern where basically when it looks super bearish at that key support level, it flips bullish. And it flipped bullish within those 3 minutes, and it absolutely printed. This was the pattern I was looking at. It looked just like this. There was this big red candle on the 30-minute, and then the next 30-minute candle was about to close, and it was closing just like this. And it was at that key 3:30 p.m. time, and then the SPY explodes up from that pattern. So I took advantage of that, and it flipped very, very quickly, and then I sold on the rip. And then into the close, I played calls literally for no reason at 3:55 p.m. It's funny because SPY has been crashing every single time at like 3:55 p.m. these past couple days for the most part. And I decided to play calls one last time there, and it didn't work out. It was a delayed spike. It had the move I wanted to, just not at the price I wanted to have it at. It went from 357 all the way to 359 almost. So it had the move. It's just the timing was off by 5 minutes, and those didn't do well. But yeah, those were the trades that I ended up making. So in terms of the mistakes, I just want to quickly kind of recap mistakes. So do not pull trades into thin air. If there's no I don't care if it's at the key level. If there's no pattern, if there's no confirmation at the key level, and there's no pattern at the key level where history is going to repeat itself, where you're seeing strong confirmations and all this stuff, do not enter the trade, even if you like the level. Don't do it. And when you're playing puts, make sure it's at key resistance. If you're playing it out of support, make sure it's the first time where a previous support is reacting as resistance right before it had the massive sell up and it rips right back up, right? And then with calls, like I said, dips at the key levels with the patterns, with the confirmations of history repeating itself, not at the breakouts, right? So that's what I prefer to do. And in terms of risk management and position sizing, I have a video within Trader Society that teaches that in terms of how you should be doing that. I got to get back to proper risk management and proper position sizing, because if I were to play things right these past 2 days, I should have been green. I'm telling you, like, the win rate really doesn't matter. I tend to have a very high win rate, but if you're not sizing in properly and cutting losers quickly, then your win rate just genuinely doesn't matter. But you can trade in a way where your win rate does matter, but it doesn't have to matter if you have proper risk management and position sizing. I don't think it's the smartest way to optimize your trading. I think you should have a strategy where you have a high win rate. I don't think you should rely on a high win rate though, right? I think you should have a strategy that has a high win rate, and where you're entering trades that you're certain on, you should have a high win rate. But I don't think it should rely on you having a high win rate. I think it should be focused on risk management and position sizing, and well balanced, and also making sure you're cutting losers quickly. But of course, risk management and position sizing can be your biggest edge. There's option traders who are profitable with a win rate as low as 30%, right? So how can I be read with a win rate of like 60% today? Well, it's risk management and position sizing. You got to size in accordingly, cut losses quickly, but of course, size in accordingly. So those are things that I want to bring awareness to. Within Trader Society, there's a video on risk management, position sizing. I just have to stay on track and do not go off the rails. If I don't go off the rails, then I'm not gonna, have lows. And I just have to understand, I love that feeling of resilience, and I love the feeling of rising out of the ashes. But just take it with me to the top. No need to go through the same mistakes again. Just be disciplined, take that feeling, have that reminder. Okay, that's what it feels like, right? Write it down. Remember that feeling in your brain, right? And there you go. You don't have to go through that again to have that feeling, right? So those are some things that I want to bring up, because I've noticed sometimes with that, sometimes I do get depressed on my climb up, and I want that type of feeling back, and I fuck up and the feeling comes back, and it's like, oh man, this is awesome, but there's no need for that. There's no need for that. You can just keep pushing for new highs and then have new minor setbacks, new levels, new heights of trading where, new setbacks are going to come, right? Not the old ones, new ones. That's what you got to be after. And take that feeling of resilience with you to the top. So, yeah, that's what I wanted to mention. That's what I wanted to bring up. Thank you guys so much for staying to the end of this video. If you do want to use this weekend to study, I encourage you to join Trader Society. It's a one-time fee. It's lifetime access. You get access to the video lesson library, where I teach you risk management, position sizing, psychology, mindset training, also all of the unique price action pattern trading strategies, how to master the SPY, the unique gap trading strategies that I've created. You also get access to the Discord server, the networking opportunities within the Discord server. And, direct messaging. You can direct message me one-on-one along with the members who can help assist you within Trader Society one-on-one. I'm telling you, we got people in here who are consistently crushing it every single week, man. Look at this. I'll go to the profit section, man. Big shout out to everyone who's consistently crushing it. Just because I had a red day doesn't mean other people had a red day, because they understand risk management, they understand position sizing, they're self-sufficient, they understand trading the best setups at the best prices. I mean, Ricky, he's up 5.3K. Look at me, I'm down 17 points. You see what I'm saying? Like, it's self-sufficiency, man. That's what's going to take you to the top. Self-sufficiency, not making the same stupid mistakes, trading as if that next trade you're going to make is the one that's going to pull you out of retirement, right? Trading the best setups at the best prices. So if you want to be a part of Trader Society, it's the first link down below in the description. You can get started now. You get instant access. I will be in the chat answering questions right now if you'd like to join us. And I will see you within the next video. Should be posted on Sunday. Thank you guys so much for investing into your education.